Hello. I've had many recent conversations with clients about the current state of the economy. I feel as though our job as professionals is to help take the emotion out of those conversations and provide meaningful data. I would like to take just a moment and share with you a few data points based on four market indicators and four economic indicators. Number one, market volatility. According to the Chicago Board Options Exchange Volatility Index, volatility currently stands at 13.94 as of January 31st, 2020. This is trending down and falls within a typical range. This source is considered by many to be the prime barometer of investor sentiment and market volatility. Number two, the average interest rate on the 10-year US Treasury bond is currently at 1.61%, which is below the typical range and trending down as of February 28th, 2020. Number three, the yield spread is at 0.04 as of February 28th, 2020, and is trending down. This is the spread between the 3-month Treasury bill yield and 10-year Treasury note yield. It measures the market's outlook for future interest rates, and it's not a surprise that it is below the typical range. Number four, home prices are at 2.55% increase over last year as of November 29th, 2019. This falls within the typical range and is according to the S&P Case-Shiller Home Price Index, which tracks change in the top 20 metropolitan regions. This indicator value represents the trailing year-over-year percentage change in the home prices index as of last month end and is currently within a typical range. The four economic indicators include number one, inflation, which is at 2.29% according to the Consumer Price Index as of 12/31/2019. This indicator value represents the trailing year-over-year percentage change in the CPI index as of last month end and is currently at 2.29%, trending upwards and also within a typical range. Number two, unemployment. This is below the typical range at 3.5% according to the US Labor Bureau and Census Bureau. This is currently trending more towards a typical range. Number three, economic expansion is at 2.1% as of the end of December 2019. This measures GDP, gross domestic product, the total market value of our nation's output of goods and services during a specific time period. It is measured on a quarterly basis. This indicator value represents the trailing year-over-year percentage change as of last month end and is currently within a typical range. Finally, number four, consumer sentiment is at a high. And given the current economic situation, it's not all that surprising. Scores are currently at 99.10, with the highest being 112. This is according to the University of Michigan survey of consumer sentiment. How confident people feel about the stability of their income affects their economic decisions, such as spending activity, and therefore serves as one of the key economic indicators for the overall shape of the economy. The dashboard I've referenced offers a snapshot of U.S. current economic and market conditions based on key economic and market indicators. This dashboard contextualizes the current reading of each indicator by comparing them to their typical historical ranges of month-end values. This information is not meant to serve as a direct prediction regarding future performance of any economic or financial market. However, oftentimes clients inquire as to the state of our economy, and I feel the best reference points are these 8 indicators that I've cited above. This information provides a snapshot of current U.S. economic and market conditions. If you would like to further discuss any of these key economic and market indicators, please do not hesitate to contact our office. We're also happy to discuss your personal situation and goals and objectives. Thank you.